Capitaland is undergoing major restructuring, and if you're an existing shareholder, your question is it good or bad for me? The answer is largely good, and I'll also explain why. In this video, I'll share with you another few more things. The first is how to understand this whole complex offer. I'll break it down into layman terms for you to understand. The second is if you're looking to buy Capitaland right now, what to look out for. Now, if this interests you, continue watching on. Hi guys, welcome back. Capitaland is actually a property developer as well as a property manager. It's a sponsor of 6 of Singapore's biggest REITs, which includes Capital Integrated Commercial Trust CICT as well as Ascendas REIT. The reason of why they're doing this restructuring exercise can be explained with this following chart over here. Have you actually seen Capitaland's share price in recent years? If you haven't, let me walk through with you over here. What you see is that Capitaland's share price was much higher 10 or 15 years back. That was in 2007. You see the share price was actually shooting up to almost $7. Just to share with you, at the point of time, developers were actually trading above book value. Crazy, right? But at the point of time, land prices were appreciating so quickly. So developers with land banks were actually trading at a premium to NAV. Contrast that to currently, you'll see that almost all developers are trading at a discount. And what you realize is the price has languished at about $3 to $4 for the subsequent 10 over years. If you compare that to Ascendas REIT, let me pull it up for you to see. Ascendas REIT has a longer history and it shows you a good comparison between a property developer versus a REIT. Capitaland was actually trading above book value, whereas REITs at that point of time were not trading above book values. So you will see the share price difference was huge, correct? All the way in 2007, 2008. The blue line over there shows Ascendas REIT. And Ascendas REIT, as of today, actually shows a much better share price performance than Capitaland, and it's actually distributed even more dividend income. What about for CICT? You realize the story is pretty much the same. It's actually trading at way higher than Capitaland as a developer and property manager. So it goes to show, even a REIT is getting a better valuation than a property developer. That is why Capitaland is actually incentivized to make this change, and probably they should have done that some time back. If you're thinking that Capitaland's share price is a reflection of poor operations, let me show you a quick summary from FSM1. This actually shows you the growth in terms of operating income across these years from 2016 to 2019. And not only that, the total pre-tax income has actually grown also very significantly. So Capitaland has been doing well operationally, but share price has been languishing simply because for developers there is a lot of discount to the net asset valuation. And that is why they're actually doing this restructuring. Let's look at the offer on the table right now. This is actually a summary of things. Implied consideration of $4.102 for each Capitaland share. What they'll give you instead is one share of CLIM, which constitutes 69% of the offer. The remaining 31% is actually made up of cash of 95.1 cents as well as CICT units. Now, your question might be, why are we given CICT units as shareholders? My best guess is they want to increase liquidity in the market for CICT. One action, two benefits kind of thing. So what exactly is this 31% buying? You must be thinking, because at the end of the day, you're still getting the investment management side. And let's move back to this summary over here. Capitaland is actually made up of development, which is what I mentioned, as well as the investment management arm. You are keeping the investment management arm. So what exactly this offer is, this 31% is to actually buy up this left-hand side, the development arm of things. If you scrutinize the net asset valuation that they have produced, $6.7 billion. And if you 6.7 over the total NAV of 21.5, it is the 31% that they are paying you for. So again, reiterate, they are using cash and CICT to buy up the left-hand side development arm. Now the question remains, is this NAV fair or not? Because ultimately properties in development, they could be still at book value. It could still be a very surprise price. But there is no better solution in the market offhand. So like it or not, I think the deal would likely go through. There is very little reason to object to it. So Capitaland, they benefit also because they are buying possibly at a good price this development side of things. And they would hold it privately and sell it to market when it's mature. To me, it's a bit like Mapletree, where they own the property development side privately and most of the deals are them selling it to their listed REITs. So if you've benefited, again, smash on like so more people can see valuable content like this. It's taken me hours to look through the material, and hopefully you've benefited and learned something from this discussion. So what is the reason to just purely list Capitaland's investment management arm alone? This chart really explains their rationale. As you can see in the green line over there, real estate investment managers, they tend to get a much better valuation. I didn't even know that overseas developers were also seeing depressed book valuations. I thought it's only in Singapore. But from this chart, the yellow line over there really shows that property developers, Singapore and Hong Kong, are actually seeing suppressed valuations to book value. So what Capitaland really wants is this more favorable valuation. So once you understand it, and if you appreciate the CLIM portion of the arm, this is what you'll get when you invest in Capitaland today. From the presentation charts, you can also see that CLIM will be one of Asia's biggest listed global REIMs. And that looks very nice, correct? And if you look at presentation charts, they usually paint a very rosy picture. More information over here. You see that fee income, FUM, has been growing across the years. EBITDA margin from fund management has been growing at a good compounded annual growth rate. Fee income is recurring. It's not lumpy, unlike property development sales. So this model actually does give a lot of predictability, and right now markets, they actually reward for growth matrix. That's why when they do in terms of fees and they can show growth, potentially markets will give much higher valuation. So these are very nice numbers. That is something you should explore if you're looking to own CLIM after this whole restructuring exercise. And that's again if it's materializing and going to be approved. There will be an EGM for it, expected to be in third quarter 2021 only. And if you're an existing shareholder, do go down and support. Now, since you sit here, I have a further bonus for you. What are some other investment opportunities that look a little bit like Capitaland as well as the potentially newly listed CLIM? The first thing to suggest to you is actually ARA. ARA used to be listed in Singapore. Right now it's a private firm. There seems to be news that's circulating that they might list in 2021, and ARA right now has amassed an asset under management of also 100+ billion. That is huge. That is almost the same size as CLIM. The company actually owns ARA, a small portion of it, and that company is actually Straits Trading. Straits Trading, if I'm not wrong, owns 20+% of ARA. And if indeed ARA lists at a good price, you should expect Straits Trading to see favorable revaluations. The second thing to consider, of course, is City Development. This is Singapore's other big property developer name. From my following of what they've been doing, they seem to have intention of listing more REITs. They also seem to have intention of growing their asset under management to derive more investment management fees. So if you're keen to find out, leave them in the comment section so I know enough of you are interested in it. And if you want a brief outline, you can actually check out this previous video I had, 10 dividend stocks for 2021. City Development and Capitaland were one of those names over there. So if you want to see that video, inviting you there, and I'll sign off from here. Take care and goodbye.